Hello guys, how are we doing today? Let's quickly see something on EURUSD. Remember, price is booked on liquidity, so external liquidity to internal liquidity and vice versa. So I think I did quite a lot of videos on this last week. This bullish move, wow, this candle is huge. This candle is very huge. Can you see this? EURUSD did almost 500 pips in 1 week, guys. In 1 week, almost 500 pips in 1 week. That is huge. Okay, so we saw what happened. I've said this earlier on that ultimately price was coming from a 1 month fair value gap. Can you see this? Price is rejecting from a fair value gap on our monthly time frame. Price rejecting from a fair value gap on our monthly time frame to fill up this fair value gap here or this other block, and ultimately we can call this a what? A relative equal low. Remember, this is your 1 month time frame, so price might not get there as quickly as you expect it to do, because price retraces, reverse, and expands. So after an expansion, we are expecting a little bit of consolidation, then a continuation to expand, or after every expansion we can get a little bit of retracement, then another huge expansion. Can you see what happened here? It's a huge expansion to the upside from here to this to the upside, a little retracement, moved up again, the retracement moved again, then it retraces down into this fair value gap, and it is expanding aggressively to the upside. So let's see what EURUSD will do in the coming days. Okay, but I can just give us a little bit of expo on our weekly time frame. We see here, okay, this was a liquidity that was taken out on our daily time frame. Okay, can you see there's a high here to be taken out? Let's see how this happens. Okay, so quickly we have a fair value gap here to be filled on our weekly time frame. So price can either do a little touch and continue to move into the upside. So I'm expecting price to come down a little bit. Let me zoom in so you can see this clearer. So I'm expecting price to come down a little bit here to move up to the upside. So price moved away from here, from our monthly time frame fair value gap, and it gave us a what? A BMS on our daily time frame. Can you see? Sorry about that. Can you see a break market structure? Our daily time frame went up, took out this low. Price took out this low, to take out this high. This was the high responsible for this low to be taken out. This is a lower high. This is a higher low. Sorry about that. This is a higher low. Then it formed what? A lower low. Then instead of price to move, then to continue downwards, instead it came out to what? To take off this high. This high, guys. Took out this high. So this was our breaking market structure. After this high was taken, price never formed a lower low again. This was the lowest low we had in all of this region. So this is why we call this a breaking structure. Price came down to fill this other block, all of this zone here, and what started with higher pricing, took out this high, and it was a run. So why were we having this this slow move here? Can you see this other block here attached to a fair value gap? This is what is responsible for all of these hiccups. And you can also see it clearly on our weekly time frame. On our weekly time frame, you can see clearly that we are presently at an higher time frame reference point. So this liquidity has been taken out. Remember, I said market moves from external liquidity to internal liquidity and vice versa. So here we moved from internal liquidity to take out this external liquidity. If we go behind well enough, you would see that there was a fair value gap here that price came to fill. So this high and this low. and you see that price came to fill up this fair value gap. Then so price rejected from an internal liquidity. This is an internal liquidity. This fair value gap on your weekly time frame, where your daily time frame weekly structure occurred. You know, we took out this high, came back to this other block on your weekly time frame, then we began to go upward. So we can expect a little bit of retracement. Having taken this high, this is external liquidity. We are expecting price to come take out or to come to retrace a little bit into this fair value gap, which is what internal liquidity, then continuation to the upside. So ultimately, I want to see this high taken out. So I'm expecting something like this. Remember, we only take out what price presents to us on a daily basis. So this is not a financial advice, and we are not market makers. However, I'm expecting this to play out. Internal liquidity to external liquidity. So we see that after this high was taken out, there was a bit of retracement to the downside. So let's see how far this will retrace. Let's go to our daily time frame. Okay, on our daily time frame, we can see that we have quite a number of volume imbalances to be filled. Can you see this fair value gap? This fair value gap. So I expect price to come down a little bit to fill this place. That is this. Might not need to fill it totally. Might just be on a 50% range. Yeah. So we can expect price to get to our 50% range. That is the consequent encroachment. So let's see what happens here. So let's take this out. So let's see if we get to this consequent encroachment before it begins to move upward or to this point. Now you might want to ask, what is the sign? What should I be looking out for me to prepare myself for a bullish move within this weekly fair value gap? It's simple. What you are looking out for is a break in structure on your 4-hour time frame. So if you see something like this, within this zone, either at this zone or to the 50% or at the discount level, at any point you see it, you can take it, especially if it happens on your 4-hour time frame. So this is what will give us our sign that price is about to move to the upward side. Until then, we have to sit on our hands and watch. So you could just, you could just take a little bit of, on your lower time frame, you could, just dance around price here, but ensure that your risk is limited. Remember, price is still bullish from our monthly time frame, from our monthly time frame and our weekly time frame. Price is still very much bullish. So you want to limit your risks in case you are taking this sell. Let's say you do risk 1% before, you want to risk about 0.3, 0.4. Why? Because price is ultimately bullish and you are trading against the trend. Yeah, remember, trend is our friend. Until then, guys, have a good trading week.